Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by NotebookLm AI, this series brings you clear, meaningful insights into finance and beyond. Welcome to Episode 4, where we explore October's shockingly low job numbers, just 12,000 new jobs added, and unpack what this could mean for the economy, Federal Reserve actions, and Bitcoin's performance. Join us as we dive into the potential ripple effects for markets and your financial outlook. Disclosure: this podcast is for informational purposes only and not financial advice. Please consult a professional for financial decisions.
All right, so are you ready to really just dive into this jobs report?
Oh, yeah.
Because it's a doozy.
For sure.
October 2024 came in way lower than expected. And now it feels like everyone's kind of parsing all this data, trying to figure out if this is just a blip or a sign of something bigger looming on the horizon.
Definitely a case study in how one single data point can send these ripples through the entire market. And you've brought a stack of sources that offer some fascinating and sometimes conflicting perspectives of what it all means.
Exactly. So let's break it down.
Okay.
First up, we've got this image labeled Joe BS report.
Okay.
Just looking at the numbers, that initial reading of 12,000 jobs added is pretty dismal. And the revisions to previous months make it even more confusing.
Oh, wow.
Some of those numbers swung by tens of thousands of jobs.
That's what makes this situation so interesting, right? It's not just the low number itself.
Well, it's the uncertainty that it creates.
Right.
These revisions were unusually large and, importantly, downward.
Wow.
That suggests that even the data we thought we had was off.
Oh, geez.
Adding another layer of complexity for anyone trying to predict where the economy is headed.
Okay, so we've got this initial shock to the system.
Right.
What I found really interesting was looking at the manufacturing jobs monthly change image.
Okay.
You can see those green bars of growth and then bam, red bars of decline. And lately those red bars have been getting pretty intense.
Manufacturing is often seen as an early indicator of economic health.
Okay.
If businesses are feeling uncertain, one of the first things they do is scale back production, leading to job losses in that sector. So the volatility we're seeing here is a definite cause for concern.
Okay, that makes sense. But what I'm wondering is, could this just be a manufacturing specific issue?
Or is it a canary in the coal mine for the broader economy?
That's the million-dollar question, isn't it?
Yeah.
And it's where things get really interesting.
Okay.
You've got this excerpt from gbUntXO84PLK.pdf.
Okay.
That outlines some potential market reactions.
Okay.
Let's see if those offer any clues.
Exactly. And this excerpt lays out a whole range of possibilities, from a knee-jerk sell-off in equity markets to a potential rebound as investors anticipate lower interest rates.
Yeah.
It even mentions the U.S. dollar weakening, which could actually benefit exporters, right?
It's like everyone is trying to guess which way the wind will blow next.
Totally.
But what I find fascinating is how the sources connect this job report to the bigger picture of monetary policy.
Okay.
For example, you've got this expert in transcript.pdf who argues that the recent 50 basis point rate cut by the Fed might not be the guaranteed bull market signal some people are taking it to be.
Yeah, they seem to be saying, don't get too excited just yet, right?
They actually argue that the market overreacted to that rate cut.
Okay.
And that the Fed's long-term strategy, which hinges on data like inflation and unemployment, is still up in the air.
What's particularly interesting is their second point.
Okay.
That while historically aggressive rate cuts are correlated with recessions, it's not a foolproof predictor.
Right.
They even highlight data pointing to a 61% probability of a recession before August 2025.
Okay.
But that still leaves a 39% chance of avoiding one altogether.
Okay, so we've got conflicting expert opinions.
Right.
A volatile jobs report and potential market swings in every direction.
Yeah.
It's enough to make anyone's head spin.
Totally.
Where do we even go from here?
Well, you've also included some excerpts from Bitcoin and labormarket.pdf that offer a different angle on this whole situation.
Okay.
This expert points out that the overall unemployment rate actually dipped to 4.1%,
All right.
down from 4.3%.
seemingly good news.
Yeah.
They also note that permanent job losses, while increasing, haven't spiked like in past recessions.
That's a good point.
Yeah.
But then they throw in this counterpoint.
Yeah.
Even with overall unemployment down, certain groups, like new entrants to the workforce, are having a much harder time finding jobs.
And that's the nuance we need to pay attention to.
Yeah.
Right? This expert suggests that fewer people quitting their jobs might actually be a sign of fear, not stability.
Interesting.
They might be clinging to their current positions because they're worried about finding new ones in this uncertain economy.
So even seemingly positive data can have a darker undercurrent.
Exactly, and it highlights something crucial.
What's that?
Markets are forward-looking.
Okay.
Even if the labor market seems okay right now, investors are more concerned with what's coming in the next 6-12 months.
Right.
That's where the real anxiety and potentially opportunity lies.
Totally. So it's like we're looking at this economic puzzle with like two sets of lenses.
Right.
One that focuses on like the overall numbers and another that like zooms in on the experiences of specific groups.
Exactly.
It's a reminder that data can tell very different stories depending on how you interpret it.
And that brings us back to those expert opinions you pulled.
Okay.
The expert in transcript.pdf who argued against the like rate cut rally mindset made a point that stuck with me.
Okay.
They said the market may have jumped the gun celebrating the Fed's 50 basis point cut.
Right. Like maybe a rate cut isn't always a straight shot to a bull market.
Exactly. They emphasize that focusing on the Fed's long-term strategy is key.
Okay.
And that strategy hinges on things like inflation and unemployment.
Right.
Those are the indicators that will truly shape the Fed's decisions going forward.
So we need to be careful about reading too much into any single action by the Fed.
Yeah.
It's about understanding their overall approach.
Exactly.
Not just reacting to every move they make.
Precisely. And what's fascinating is that this expert also provided a counter-argument to their own point, highlighting that while aggressive rate cuts have often preceded recessions, it's not a guaranteed outcome.
Right.
They even referenced data showing a 61% probability of a recession before August 2025.
But then they flipped the script by reminding us that means there's still a 39% chance of NO recession.
Exactly.
It really makes you question whether all the doom and gloom is warranted.
It's a brilliant way to encourage critical thinking.
Yeah.
They're not saying a recession is impossible, but rather forcing us to confront the fact that the future is uncertain.
Okay.
And that uncertainty itself can be a powerful market force.
Okay, so we've got these mixed signals from the experts.
Right.
And the economic data itself.
Yeah.
Let's circle back to those potential market reactions from GBU on T, XO, AE, for PLK.PDF.
Okay.
We talked about everything from a sell-off in equity markets to a potential rebound.
Yeah.
Even the US dollar weakening.
It's like a choose-your-own-adventure for investors, isn't it?
Totally.
But what I find most intriguing is how these reactions are linked to investor psychology.
Okay.
For example, the excerpt mentions bond yields potentially dropping as investors seek the perceived safety of bonds.
That classic flight to safety move. Everyone runs to bonds when they get spooked.
Exactly. But what will determine the intensity of that flight is this jobs report enough to trigger a full-blown panic?
Right.
That's where things get really interesting.
Okay.
Because if investors do get spooked, it's not just bonds they'll flock to.
Right.
We could see a surge in demand for other safe haven assets like gold.
Right. Gold, the ultimate security blanket when the markets get turbulent.
Precisely.
Yeah.
And that brings us to an interesting question.
Yeah.
If we do see this flight to safety, how might it play out differently in the world of crypto?
Interesting.
Remember those excerpts from Bitcoin and labormarket.pdf you brought?
Oh, yeah. This expert had some fascinating points about how Bitcoin tends to perform in Q4.
Right.
Historically, at least.
Yeah.
They pointed out that it's often a strong period for Bitcoin.
Okay.
Potentially due to increased investment from both individuals and institutions.
That's right. But they also cautioned that this time might be different.
Oh.
Given the uncertain economic backdrop.
Right.
If traditional markets are volatile, that could spill over into the crypto world as well.
So even if Bitcoin has a history of Q4 rallies, this current situation throws a wrench into things.
Exactly. And they also discuss this concept of Bitcoin dominance, which basically measures Bitcoin's market share relative to other cryptocurrencies.
So if Bitcoin dominance is rising,
Yeah.
That means Bitcoin is outperforming other cryptocurrencies.
Right. And this expert believes that Bitcoin dominance could actually increase in Q4.
Okay.
Potentially even reaching 60%.
Wow.
As investors view it as a safer bet amidst the economic uncertainty.
So it's like a flight to safety within the crypto world itself.
Yeah.
Bitcoin becomes the digital gold.
That's one way to think about it.
Okay.
But even if Bitcoin dominance rises, it doesn't guarantee that Bitcoin's price will go up.
Right.
It simply means it's outperforming other cryptocurrencies.
Okay. That makes sense.
Yeah.
So what does this all mean for
right.
the listener
Yeah.
who's been diligently diving deep with us into this mountain of information?
I think the biggest takeaway here is the importance of perspective.
Okay.
We've seen how the same data can be interpreted in vastly different ways, leading to a range of potential outcomes.
It's a reminder that economics is not a crystal ball.
Right.
It's about analyzing trends, understanding the forces at play, and then making informed decisions based on your own individual circumstances.
Exactly. And that's why it's so crucial to engage with the information critically.
Yep.
Don't just accept headlines at face value.
Right.
Dive deeper,
challenge
assumptions, and seek out diverse perspectives.
And remember, you don't have to have all the answers.
Right.
Even the experts we've discussed disagree on how this will all play out.
Exactly.
It's about understanding the complexity of the situation.
Yeah.
And then making decisions that align with your own risk tolerance and financial goals.
That's an excellent point.
Yeah.
It's about empowering yourself to be an active participant in your financial journey.
Yeah.
Not just a passive observer.
So be curious.
Right.
Be informed.
Yeah.
And most importantly, be engaged.
Totally.
This is your financial future.
Yeah.
And you have the power to shape it.
That's a great point to end on.
All right.
Thanks for joining us on this deep dive.
It's been a pleasure exploring this complex and fascinating topic with you.
Yeah.
And to our listeners, thanks for diving deep with us.
For sure.
We'll see you next time.
See ya.
Okay, so we've explored this jobs report from all angles. The raw numbers, expert opinions, potential market reactions, even what it might mean for crypto. But I keep coming back to this one idea.
Yeah.
Markets are forward-looking, right? So what exactly are they looking for in the months ahead?
That's a great question.
Yeah.
And it brings us to the heart of what makes this situation so fascinating.
Okay.
The October jobs report itself was a bit of a shock.
Yeah.
But it's really just one data point in a much larger economic narrative.
Okay.
What markets are trying to decipher is whether this report signals like a turning point.
Right.
Or if it's just a blip on the radar.
So it's like we're in this in-between space where anything is possible.
Totally.
We could be on the verge of a recession, or we could see things pick back up.
Right.
And that uncertainty is making everyone nervous.
Exactly. And that nervousness can translate into volatility, as we've discussed.
Right.
But what's interesting is that this uncertainty also creates opportunity.
Okay.
If you can accurately anticipate which way the economy is headed, you can potentially position yourself to benefit.
Okay, so let's put on our prognosticator hats for a moment.
Yeah.
What are some of the key indicators we should be watching in the coming months to get a better sense of where things are going?
Well, the most obvious one is the next jobs report, of course.
Right.
Will we see another weak number?
Yeah.
Confirming a downward trend?
Okay.
Or will it bounce back, suggesting that October was just an anomaly?
Right. That's the big one. But what else? Yeah. What other data points could give us clues about the economy's health?
Inflation is another key factor.
Okay.
Remember that the Fed is laser focused on bringing inflation down to their target level.
Right.
If inflation continues to rise, or even if it plateaus at a higher level than the Fed wants, that could force them to take more aggressive action.
Okay.
Which could have a ripple effect throughout the economy.
So we need to keep an eye on those inflation reports just as closely as the jobs numbers.
Absolutely. And beyond those headline numbers, it's also worth paying attention to consumer confidence.
Right.
If people are feeling good about the economy, they're more likely to spend money, which drives growth.
Yeah.
But if they're feeling uncertain or pessimistic, they might pull back on spending, which could slow things down.
It's all connected, isn't it?
Exactly.
The jobs market, inflation, consumer confidence, they all influence each other.
It's a complex system.
Yeah.
And it's impossible to isolate any one factor in a vacuum.
Right.
That's why it's so important to take a holistic view and consider all of the available information.
Okay. So we've got a lot to watch in the coming months.
Yeah.
But let's bring it back to this idea of opportunity.
Okay.
You mentioned that uncertainty can create opportunity for those who can accurately anticipate the future. What are some potential scenarios that investors might be considering right now?
Well, one scenario is that the economy proves to be more resilient than many people fear. Maybe the October jobs report was just a blip.
Right.
And the underlying fundamentals are still strong.
Yeah.
If that's the case, we could see a continuation of the bull market, with stocks continuing to rise and interest rates remaining relatively low.
So in that scenario, staying invested in the market would be the winning strategy.
Exact. But of course, there's also the opposite scenario.
Right.
That the economy does indeed slip into a recession.
Okay.
If that happens, we could see a sharp decline in stock prices.
Yeah.
As investors flee to safety.
Right.
In that environment, bonds, gold, and other safe haven assets would likely outperform.
So being prepared for both scenarios is key.
Yeah.
Don't put all your eggs in one basket, as the saying goes.
Precisely. Diversification is always important.
Right.
But it becomes even more crucial during times of uncertainty.
Okay, so we've covered a lot of ground in this deep dive.
Yeah.
We've analyzed the jobs report, dissected expert opinions, explored potential market reactions, and even ventured into the world of crypto.
It's been a journey.
It has. What's the ultimate takeaway for you, the listener, who's been on this journey with us?
I think the most important message is this.
Okay.
Knowledge is power.
Okay.
The more you understand about the forces shaping the economy and the markets, the better equipped you'll be to navigate these turbulent times.
Don't be afraid to challenge conventional wisdom.
Right.
To ask tough questions and to form your own conclusions.
Exactly. And remember, even in the face of uncertainty, there's always opportunity for those who are willing to do their homework.
Okay.
And stay ahead of the curve.
So stay curious.
Yeah.
Stay informed. And most importantly, stay engaged.
Absolutely.
The future of the economy is being written right now.
It is.
And you have a role to play in shaping it.
That's a great point to end on. Thanks for joining us on this deep dive.
It's been a pleasure exploring this complex and fascinating topic with you.
For sure.
And to our listeners, thanks for diving deep with us. We'll see you next time.
See you. See you later.